The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good. Lewis, I want to mention that today's anniversary of the flash crash of whatever year it was, 90-something or whatever. And so that was a flash crash anniversary that usually never happens with anniversary dates. Folks, I posted a chart for the FTSE and also for the DAX. The FTSE is, of course, making a large ABCD, and the DAX is making a lower high 135 pattern that we're looking. Now, a lot of things happened yesterday, folks, with that big move up, as we were talking about yesterday when we were on the line here with the gold going up to 1816 and closing around 1814. I said we need to check all the open interest tomorrow, which was yesterday. And so last night I checked the open interest and sent out the video. But every single thing that was on there had an increase in open interest. The only one that really didn't have an open interest increase was silver. It was basically unchanged. No new buyers, no new sellers. I'll go through silver and gold here in just a little bit. But the fact that there was a big increase in the E-mini S&P, not too much in the NASDAQ, not too much in the Russell, but the markets were set up that with that big of increase, that if the market was going to continue to move up today, that we've been short the Russell for about 10 days, and unfortunately had a great profit. We still had a good profit when we got out of it today, but we just can't stand in front of it here Friday in an up week. So I think that that's the way I'm going to handle it. We missed so many things this week that it's really, really very, very frustrating, boys and girls. Very, very frustrating. I wanted to show you the one that I thought the gold one was going to be the most frustrating at all, but this one here takes the cake. Let me get this up here and show you, because this is what we had in the newsletter on last week to look for, the 382 in the Treasury bonds up here, folks. And by golly, guess what? It went up there and dropped $2,500. But the problem was I shaded it 6 ticks and still didn't get filled. I have my attorney looking into that. Anyway, that was one that didn't quite get filled. Now, some of these are really interesting, what happened here. First of all, let's take a look at what Apple has done here. Let's just a minute. By the way, Shane will be our guest. Shane Smolian, the Wolf Trader, will be our guest at the break. Look at Apple here, folks. All it could do so far today to hit the 382 at the 132 level. That to me is, that's not very bullish considering the NASDAQ's up 100 and almost 200 points, and Apple's just acting weaker than the rest of the market. Why, I don't know, but that's what I see. I just going to report what I look at. Okay, now the big one that needs to be taken care of is this one right here, and this is the weekly chart of the NYA. Is still, that 3-drive pattern is still there. We're a tiny bit above the 1.618 level, but with the market this large and weekly chart, you got to give it a little bit of room. If it in fact is a top, I don't know, but that's one of the ones that we're watching. We have not made new highs in the NASDAQ. We have not made new highs in the Russell, and don't blame it on the jobs report. I mean, it was a bad jobs report. Thank goodness. If it had been a good jobs report, the Dow would be up 7,000 today probably. But let me show you the one to me is the most interesting. We focused on this last night in the video that I sent out, and that is I'm going to look at crude oil in just a little bit, Ruby, but I got to do these other ones. Okay, here is the silver. We talked about the gold hitting that number, the exact 50% retracement at 1816 yesterday. And the main thing was we had to check open interest. The open interest in the gold was up substantially, but silver had no increase. I mean, it was like, I think it was 700 contracts, which was nothing. But notice the 61% retracement there, folks, because today, in the heat of all the battle, everything going on, Look what happened to silver. I mean, this is just amazing. You think these Fibonacci numbers don't work? Give me a break. Here is the silver. Look at that. It hit the exact number, and dropped 60 cents. You know, I mean, it dropped. That's a lot of money in silver, folks. It's $3,000. So anyway, let's keep a close eye on that, because that might be a major top in that silver. Gold, I'm not so sure of, because we extended up and we had a pretty good increase. If gold would close below 1820 today, then I'd say yes, there's a possibility of that. But all this most probably is being one other one I need to talk about here is the old red metal, and that's copper. Copper, with all the news going on, you see it extended past the 1.618 expansion at 471. We got up to 475 today. Big, wide-ranging daily bar from 59 all the way up to 74. So that's a huge move there. So lots of volume and everything, and lots of players coming in, folks. That's what we like to see, and we're going to see volatility increase over and over again. That's what our main strategy is to try to catch some of these things. The euro just absolutely frustrate the heck of us this week, folks. We missed that one by a heartbeat. We missed the gold by a heartbeat. Oh, this has been a heartbeat city. And then today, I didn't have an order in for everybody on the bonds because I thought it was a little too wild, but I did have it for myself, and I missed it by just a little bit. And that would have probably been one of the better ones of the day, but that's neither here nor there. Okay, let's move on to a couple of things here. I'm going to talk just a little bit here about this euro, because I'm going to do it through the eyes of the dollar index, because that's 55. The euro's 55%. You notice we couldn't make that 382 retracement there. We missed it by about 12 pips. The euro missed it by 5 pips. And that was the strength in the euro is the exact opposite of this, and the way the euro went. We were trying to buy it down there at 118 and change, 119.80. The low was 119.85, and then away it went up, and that's neither here nor there. Okay, now we're going to try to make Ruby a happy girl today. What we're going to do here is come up here and get up the L crude oil, and crude has been a very good one today, folks, because we had a beautiful hold on just a second, and we will get this up here so everybody can see it. Just a second here. Oh, shut the front door and raise the rent. Give me a little bit of a break here, and I'll get this up for you. This is one that we were looking at today. We had a really nice ABCD Gartley down there at the 78% level, and now we've had a pretty good rally. We've rallied well over $1 a barrel. And now we're facing a situation. Let me get the chart up first here before I talk about it. You'll see here we made the 78% level at 63.90. We rallied up to 64.90 now. But what we're looking at now is the potential. This rally off of that last high at 66.90 is setting right at an area where it's going to have a lot of difficulty here at 64.90. And that sets up a possibility for a short sale. So on a shorter term basis, it would be in a negative bias right now. But earlier this morning, we had that really low risk trade down there, and that's what we're paying attention to. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to take a look here at the euro on the daily basis. As you can see here, we had the 5-day down move that just missed the 382, and of course we've had the big explosive move. We were up about 1 3/4 points here in a matter of several days here. But we've taken out the highs of the previous week, and as you can see here, we're right at a 71% retracement of the high that we made way back in January. Now, I'm not sure whether this thing is going to go straight up or not, but with this wide-ranging bar today, one has to sort of respect it. You never know, what's going to happen to these things. So one of the things that I'm looking at today is just on a shorter-term basis, is I'm looking at the predictive value of the AI program, and just to see if this works. And sometimes they don't work, but they don't work about 25% of the time. But look at this; it's done a pretty good job here. Now, I tried to buy that 121 area down there, but unfortunately, it didn't get filled. And you'll notice here we're expecting something around 1 o'clock. That's in about 45 minutes. So sort of pay attention to the euro in about 45 minutes if we get to that area. If you have any questions, folks, it's 877-927-6648. That's what the handle that we're working with today. So if you do have any questions right now, Al tells me the lines are just absolutely swamped, that you're not going to be able to get in, but just keep trying and try to squeeze you in the best he can. Someone's asked a question about the copper. Would I be shorting copper here? No, I would not be shorting copper here for two reasons. One, it's a Friday in an up week, folks. It's going to be impossible for the market to close lower today. I mean, if the market closed lower today, sell all your coin collections and go short stocks. But it's not going to close lower today, not with that big of a move up. Well, that would be a bigger than the flash crash. Anyway, but it's a Friday and an up week, so you can't do anything about it. Monday may be a different story. But right now, it just had an explosive move. And somebody was buying in there, folks, had nothing to do with that jobs report. The jobs report was not very good, and the market sold off a little bit. And as soon as it sold off, right at the opening, just like it usually does, in came the buyers, and away they went. This might be related to Robin Hood or Little John or Little Bo Peep. I don't know what it's about, but there's a lot of buying coming into some of these things, and you just can't stand in front of it. There's just no other way that you can do it. Regarding the grain markets, we almost hit $16 a bushel in July corn last night. We got up to $15.90. It sold off about 20 cents. But the grain markets are having nice little corrections all the way up. It's an easier market to trade. That's one of the things you want to be thinking about. Also, crude oil, really nice, easy market to trade. And, the S&P is a harder one because of the fact that you get these buy programs coming in here. And these markets can move 20, as you can see this morning, 20 or 30 points, and it doesn't take long, to cause some serious damage if you get caught into something like that. Someone's asked a question about that U.S. dollar. And that, of course, it's the exact opposite of the euro, folks. So I watch them both. I do not trade the dollar index. I just watch it. The ones that are, of course, on my watch list that have been very good to us have been the Australian dollar and the Canadian dollar. The British pound, we've not had a signal in the pound. We're still trying to get it up to that 141 level for a sale, but thus far we have not been able to do that. So there's a couple things. Someone asked a question about the hogs. Hogs have been up I think 15 or 16 days in a row up to that 115 level. Whether they correct from here or not, anybody's guess, but we've got a 3 drive to a top pattern in that one, and it certainly, could go a lot more no matter what the fundamentals happen to be. I wanted to also talk to you here about the soybean oil. This is the July soybean oil. We made new highs again last night. We cleared that 64 level. We're up around almost to 65, almost to 66 now in the July soybean oil. So there's no bears in sight over there. The fundamentals behind it we know are related to there's a drought condition not only in the United States, but of course Brazil and Argentina. And so that's causing a little bit of a serious problem in here. Now, last week, someone asked me to talk about the coffee market, which I know little about. All I do is I know the charts. You notice, folks, that there is I don't know what EYES. I don't know what that is. I don't know, Jimmy. You have to tell me what it is. I don't know. Anyway, this is the you'll see we made a 1.27. That was a monster ABC up there at that 146. That was major resistance up in that area, and that's it. And whether we get a nice correction here, which I think we're going to, that would be another one to look at. Folks, we can talk about lumber, but don't even think about trading it. It's a commercial market. It's true. I don't know if we hit 1,700 yet or not. Do you realize just 6 months ago lumber was $300 and now it's $1,700? That increases an average price of a house by about $28,000. I heard on Bloomberg last night. So, if you think that's not inflationary, well, maybe there'll be something down the line. So we'll be able to see. Remember, folks, one of my favorite books is the book by Bernard Baruch, who was the very, very closest and dearest friend of none other than James Pierpont Morgan, J.P. Morgan. And he wrote a book called My Own Story, which is autobiography. And he says in that book a couple things that I always stuck to me. He said, the secret of the stock market is they inflate prices to an unbelievable level, and they get people, he called them suckers, to buy it all the way down as they're searching for value. Well, we've got lots of value searching these days, folks, because we've not been to these levels, of course, before, and probably never will be again until Monday. But anyway, these are just a few of the things that, looking at it. I know I'm a little frustrated today because of all the things I missed this week. Still did okay, but yeah, the bond was a monster one, and I missed the breakout in the gold and a few others, but that's neither here nor there. But I'll come back strong. At least I wasn't in front of any of these darn things, and that was a good thing. Okay, let's talk one more thing that I wanted to talk about, and that was the Goldman Sachs. We were looking at the short sale on that. That's in fact one of the few Dow stocks is down today, but that market gapped up, and that would have been a $3 loss in the short of the Goldman in the Goldman Sachs trade, because nothing can do when it gaps up like that. if I had my choice, I'd probably look at to do it here over the weekend, but I'm not trading stocks, so I'm not going to be involved with it at all. Our break today is going to be in just a few minutes. Then we'll have Shane Smolian, thewolftrader.com. On Monday, we're going to have Norman calls it to the minute Winsky. He'll be on Tuesday, we're going to have David Paul from VectorVest. 12, everybody stay tuned, folks. We got Stan the Man Harley from the Harley Stock Market Letter. The 13th, we're going to have our good friend John Person, the old floor trader friend of ours. And then on the 14th, there's going to be a mystery guest. We're going to find out who that is going to be, and then we'll see how that goes. When I say mystery guest, that means I don't have anybody lined up as of yet, but I do have a few people that I have on the list to try to give them a call to see if we can get them. Now, we're going to take a little break here. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Ladies and gentlemen, it's with a great deal of pleasure I'd like to bring to you the Jack LaLanne of the financial markets, the Fed juice man himself, Shane Smolian. How are you, my friend?
Good afternoon, Larry. How are you?
Had to bring that about Jack LaLanne. I believe today was either his birthday or his anniversary. Happen to remember that. Hey, go ahead, my friend. So much is going on. Please give us some insight of what's going on, because it's very foggy here in Tucson.
Yeah, it's definitely an interesting time. Well, I'm going to start out with a few headlines here, and then we'll get into some cycle analysis. So first of all, I want to talk about the gold markets. We have really zeroed in on this. By adding this new FedJuice Skynet and also the FedJuice 3.0, we have been able to really catch these moves in the gold. And I'm just putting a quote here that I talked about on Wednesday and Thursday. I said very clearly, I said, look, the gold has been flip-flopping around, but when in doubt, follow the FedJuice up. And clearly this market has been pushing higher now. And the beautiful thing about the FedJuice is that it doesn't get caught up in all this noise. So when you want to see a general trend, a dominant type of a trend, the FedJuice is really, really a go-to model for us to look at. So just wanted to point that out, that we do have this gold market tracking very well. So we'll look at the actual fear and greed index now, which is a measure of sentiment on the S&P 500, and that's really just at 51. It's not really doing anything. This really hasn't been too useful lately. So it's just sitting there in the middle. So we really don't look to that too much. But I do want to put some headlines up that I thought were interesting, political headlines. And one of them is that big headline that came up on the Hill was the Democrats fret over Biden spending. This is significant because I talked about the midterms coming up, and typically people think about the midterms about a year in advance and don't do any big moves. But it seems like they're already thinking about the midterms. So I think this is bullish. I mean, if you get any type of a gridlock or compromising atmosphere, that's much better for the markets. So I think that's a bullish sign for the markets. And I think the Fed's powers are at all-time highs. And like I said, I think the gridlock concept is bullish for the S&P. So I think, they had a hard time just passing that stimulus, and they've got a razor-thin margin. So I think if they reach some type of a compromise atmosphere or a gridlock, that's going to be bullish. And they're already thinking about the midterms. So that's interesting. So I just thought I would put that out there. Next chart here. So last time we talked about flaws in cycle analysis. So I study cycles. I run automated trading systems. I write code. I write systematic trading models. So some flawed assumptions that we talked about last time was that the past does not always fit the future. So a lot of times what people do in the past is they assume that if a cycle is behaving a certain way in the past, that it's going to behave that way in the future. That's not always the case. And I think it's kind of wrong to think that that's always going to be true. We have to be very careful about that. The next one we talked about is that more samples are not always better. 100 samples is not necessarily better than 50 samples. And we talked about going back before the Fed really got involved in 2010 is not necessarily adding more information. And then the other thing is that a high number of samples is no guarantee of statistical significance. It doesn't mean you're going to be significant just because you get past 20 cycles or 30 cycles. So the solution that I talked about last time was the double optimized lunar cycle, where we took what happened in the past and then we optimized it looking forward. So the next slide I'm going to talk about is a little quote that I made, which is kind of interesting and it's true. It's a little bit of a little bit of humor, but I'll put it up here. And my quote is this: statistical significance is something that you say in the hope that people take your work seriously. And the reason I say that is because statistical significance does not necessarily mean anything. Even if you get statistical significance, it doesn't mean a trading system is going to work. And so this is really, really important. I'm going to illustrate this in the next slide with a couple of trading systems that I have. So these are two trading systems side by side here. Sample A and sample B. So these are two profit curves, and the one on the left is actually the highest statistical significance of these two curves. It's, if you look at the different chi-square, all the different t-tests, it is the most statistically significant one, and the curve looks the cleanest. The curve on the right is more choppy. It's moderately statistically significant, but when you test these two systems in reality, the one on the left is not very good. In fact, it's trash. It doesn't work. Like if you go and you test it into the future, it doesn't work. But the one on the right is actually very good at predicting the future. So I want to put that caution note out there. Just because something is quote unquote statistically significant doesn't mean it works in going into the future. So we got to be really careful about this. Now, so here's another flaw in cycle analysis: inversion. Larry, I think you've talked about this a lot with the Bradley. Am I not wrong about that?
Oh yeah, I pulled my hair out. Both strands of it over the past years, trying to worry about inversions. But that's a good topic. Please continue.
Yes. So I've always, when people have said this to me, I'm kind of like, yeah, that sounds a little bit like an escape hatch. Like I'm making an excuse. Like, oh yeah, it just inverted. That's what happened. So is there a scientific way to do this? So this is what I'm looking into now. I've actually come up with a method to do this. So why would a cycle invert? Well, there's a couple of reasons. From an astrological standpoint, sometimes when these planets retrograde, it can flip the meanings of the actual cycles. It can happen. It's a known phenomenon. You can see it, but it's not necessarily as reliable as we would like it to be. But it's definitely there, and it's something to note. The next one is the Fed. The Fed, and this is what I'm going to talk about here, can invert the cycles. And I'm going to prove this to you in a few slides. And then, of course, there's unknowns we don't know about. Why would a cycle invert? There's other things that we can't see going on behind the scenes. So can we measure this? Yes, we can. And so what are some real-life examples? Well, I'm going to show you the S&P 500 and the Planetary Speed Index. Now, the Planetary Speed Index is an indicator that I've used to measure the S&P. And it's been very good, but I've found that this can invert. So I've figured out a way here. The S&P 500 is here on the top. The Planetary Speed Index is here in the pink. And then down here, I have an indicator that I've written to show me when does this invert? In other words, inversion means that when the cycle's going up, the market falls. And when the cycle's going down, the market goes up. So when this inversion indicator here is to the upside, that means that we are inverted. So guess what, Larry? We're in an inverted environment right now. The market is inverted. It's going up. The Planetary Speed Index is falling. And so now I have a way now to scientifically do this where I can actually quantize this and say, look, it's inverted. And I've been talking about this for days with subscribers saying the cycles have inverted. We've likely hit some type of a low a couple days ago on the actual charts. So this is really important. And I'm actually going to turn this into a trading system, an actual trading system based upon the way that these cycles invert. So that, cycle analysis is a very complex topic, but now we have a way to actually measure these inversions. So I'm going to show you next some examples of the past, what has happened when this cycle has inverted. So this is the S&P 500 going back, looking back to into March, April, and May. Okay, so what this chart represents is down here. These are inverted periods. So these gray marks here, I'll label them A, B, and C. These are periods where the cycle has inverted, and we'll talk about that after the break.
Yes, we'll be right back with Shane Small, you folks, wolftrader.com.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back with Shane Smolian, folks, and I believe I heard a little bird tell me that someone's going to be speaking down in Orlando at the Money Show. Is that true, Shane?
That's absolutely correct. June 11th.
Hey.
I'm going to be speaking.
Wow, very good. Hey,
yeah.
You've been invited to the show. That's big leagues.
Yeah, we'll see. We'll see how it goes.
Congratulations.
Thank
You've got good stuff. They're going to love it. You're going to love it. Okay, please continue.
All right, so this is just to show you now that we've really added forecasting power now because we're able to find out when these cycles invert. So this is just more examples here. S&P going up here on the top, cycle falling when it inverts, and then when it goes direct again, it follows the planetary speed index. So this is a very new development, but I'm actually going to make a trading system out of this, which is really cool. These are non-inverted sections. This was during COVID. When it's not inverted, you can see that when it's not inverted, the cycle rises and the S&P rises, the cycle falls and the S&P falls, etc. So essentially, by having the ability to track when this is inverting, we can get an idea of what's going on. Now, the S&P right now is inverted, but I think it might be reaching some type of a medium-term inversion, peak on this inversion. If you see this graph here, it's getting near the top in terms of its inversion of capabilities. If that's the case, then maybe we do reach some type of a near-term top here on this S&P. Now, the Fed has really been spectacular in their ability to time this. It's almost like they know when these, like Larry, we talked about this top coming in, this Astro top, and yet here they come right when that top comes in and they start ramping up the juice again. I think they're responsible for these inversions, and it's kind of a mysterious thing, but I think that they're playing a key role in this for sure. There's no doubt about it. Now, if we take a look at the S&P 500, I did talk about how on 5/5 we hit an important low on the S&P on this polar R squared. But the longer we hang out here, guys, the less selling potential we have. This month was supposed to be negative, and I said this. Look, this is probably going up. The medium term, we've had this in an up pattern. This is the first day today that it looks like we might actually get some type of a reversal signal. This Fed juice Skynet in gold here and the Fed juice have been excellent at forecasting these recent turns in the S&P. And this is the first day now that it looks like it might come in at a sell signal. I'm still collecting the data, but not really sure yet how that's going to come out. But right now it looks like it might be at a sell. And that inversion might be ending soon here. So this is another indicator that I use called the polar R squared. And when this hits lows down here, this is down here, when this hits lows, it has a very high chance of reversal on the S&P 500. You can go back through time and see this almost every time. It's about 80% effective, but every time it hits a low here, the S&P usually careens off of that, and we did see that on May the 5th. So I did tell the subscribers, I said, look, the medium term has been up all week. We probably hit some type of a low on May the 5th, but that might change if we get that sell signal today. Now, Larry, I want to show you the Bellissimo chart of the day. Okay, you're Italian, right? So this is
the best.
Bellissimo. This is the best. This is copper. This is the most beautiful chart that I have here. This has been trending beautifully with the Fed juice here. So on 419, the Fed juice goes into this buy, and the double optimized lunar cycles have been modeling this market just beautifully here. You can see it comes down on the 5th, and it is reaching some type of a high today. So it's possible that we might be seeing some type of a short-term top here today. I really have to get all the Fed data. I got to usually by 1 or 1:30, I get it all in. But if that's the case, then we could see some type of a high here, and then maybe we do head back down. So we will see. Now, everybody knows that Elon Musk is a big fan of the Dogecoin. I don't know if you guys know this, but Elon Musk is going on Saturday Night Live to promote it and reveal the true scientific name of the asset there. You know what the true scientific name is?
I'm almost afraid to ask. Can we do that with tongue in cheek or without worrying about being banned by the FCC? Go ahead.
True scientific name is Dogecoin. I'm kidding, Larry. It's a joke. Okay.
Oh.
Anyway, so he's going. So the reason. He's going on to promote Dogecoin. The reason why I talk about this is that this is kind of interesting. This might be a headline type of event for the crypto markets, because gold is really starting to make a push now, and gold and Bitcoin tend to run opposite directions. So on the next slide here, I'm going to show you this is gold versus the dollar and gold versus Bitcoin. Now we know that the dollar runs opposite of gold. So you can see here the dollar took a recent decline here, and gold takes this hook up. So gold is always sensitive to the dollar. But what a lot of people don't realize is that gold is also running generally opposite of Bitcoin. So I think the crypto markets could be in some trouble here. I think coming into the summer months, gold typically gets strong into about August. And so if we do see this continued strength in gold, I think the crypto markets could be looking at some issues. And we're seeing we've already seen rotation out, of Bitcoin into gold, also into the Dogecoin, and these other markets seem to be doing a little better than Bitcoin. So I'm a little concerned about Bitcoin here, showing some potential vulnerability coming up in the summer here. So that's just a chart that I wanted to bring to people's attention. It is something to look at. So gold and Bitcoin are running opposite. So gold might pick up the inflation flag and carry that forward here going forward. So I think the gold bugs will be happy to hear that. But it's just something to point out here. Now, this is a chart of Bitcoin here. We do have the Fed use Skynet for Bitcoin too, by the way. These are the yellow arrows here. It's been doing a very nice job of forecasting this. But this solar cycle is really rounding out here and making a top on the Bitcoin. So if people don't realize that these cryptos do have seasonal patterns too, and this one is rounding out. And so the fact that gold has already started to make that run I would be a little bit concerned here about what's going on here. So we do have a buy here today on the Fed use Skynet on that. So we will see what happens. On the short term, it's still okay, but longer term, I think that these cryptos could be, it could be looking at some type of a topping pattern. So another chart that
topping pattern, you mean 1 day correction?
Oh, yeah, exactly. Well, no, I think you could get a protracted pullback. If gold really starts to run, I think the cryptos could stall out here. I mean, I could have a pullback coming up here. So just something to consider. I feel like we're doing a good job modeling this with our indicators here. So something to think about. Another one here that's interesting, which is following the general path of gold, is the bond. The bond is, you can see that we've done a very good job of tracking this too. The Fed use goes into the buy on the 5th, and the double optimized lunar goes into a buy on the 5th, and we get this nice run up today. But this is also making a high today on the double optimized lunar. So, Larry, it's possible we could be seeing a short-term high here on these markets. I mean, I don't think it's out of the question. I know it's been tough.
Sorry, folks. We have technical difficulties. Our sound went out for a minute, so you're safe, Shane.
Okay. Well, I'll go back to the S&P.
Go ahead.
I'll go back to the S&P here, and I'll just say that, this Fed juice Skynet has been very, very good at forecasting these highs, and it's making it right now. It's in a sell for the close today.
Okay, we'll be right back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. Shane, we have a request to chat about silver. Do you have a comment on silver?
Oh, silver's been looking much stronger than gold. Let's see if I can pull up a quick chart here. I'll try to go live on my computer here. I actually am prepared for this here. I don't know if you can see this now. Can you see the chart?
I think the folks at TFNN can, so we should be okay.
Okay, silver, in general, the Fed juice has been much stronger on this. You can see this is the Fed juice. This has been one of our strongest Fed juice performers. I would say the next high here on the double optimize is somewhere around, probably around May 11th. We'll be looking if you could get into a high into there. So that's a general comment on that. I don't have too many prepared slides on that, but if the folks want to reach me, you can reach me at wolftraderfutures.com, www.wolftraderfutures.com, and we also have a Twitter at wolftrader FUT1, and then also we have a YouTube channel, which when I get the time, I try to do some webinars, and we also do have auto trading available now. So for the fast Fed model on gold, We have auto trading available. So what that is that just it will automatically trade the account. So it's just something to look into if you're interested. If not, these signals are available. Everything that you've seen today in one of our newsletters or our services. So come by and check it out. There's a 7-week trial in all of these different newsletters. We have S&P, metals, energy, currencies, and cryptocurrencies. And so we'd love to hear from you if you want to come by. Any questions?
Have coffee and donuts if they stop by?
I'm working on that one. Working on the gift card.
Hey, listen, thanks for joining us, my friend, and congratulations on being selected at Money Show. That's you're going to enjoy it very much, I believe.
Thank you, Larry. I really appreciate it.
Okay, folks, we'll see you folks on Monday. We'll have Norman, who calls it to the minute, Winsky, and then Tuesday, David Paul, Wednesday, Stan Harley, and John Person on Thursday. Have a wonderful weekend. Remember your mothers, folks, if you were fortunate enough to have one, because we wouldn't be here without them.